All right, so I'm going to start with the NDX bar chart. For those of you who might be new to the live trading room, we do a mid-market commentary most every day just to try to share with you an overall perspective that we see. We, in this case, being me. Usually Michael is here with me and will share some of his insights. So Allison, you can jump in at any point on what you might be seeing. But let me just start with a 1-year daily chart on NDX. We see this same declining channel that we've been tracking for quite some time. Now, I modified this channel just a slight bit this morning. And the way I modified it is, let me get rid of this here. The way I modified it is I adjusted resistance up from coming across the tops of Thursday and Friday to coming across the high of today. Now, why would I do that? Doesn't that just mean you're moving your lines to make your channel look good? Well, no, that's not the case at all. This is a channel that exists based on multiple resistance levels, multiple natural levels of resistance. Starting back here in early November, and of course we had early December, and then we had late December, and then up until today, we had Thursday and Friday, but then today we moved a little bit higher. And I believe that one of the best ways to capture an overall view of what's going on in the market is to make those minor tweaks and adjustments when necessary. And so I will take a look at my charts on a daily basis and I make those adjustments as I see fit. If the adjustment is completely changing the entire scope of the channel, either changing dramatically the angle of the channel or the placement of support or resistance, then an adjustment may not be warranted. It may be instead that you just need to identify a new pattern that is developing. But in this case, one of the things that I have been aware of is that support, the corresponding parallel support to my declining resistance, has been back here primarily on the one price point on the 8th of February. The next price point on the 9th was a low that was comparable, and then on the 11th it was comparable. So you had a 3-day trading period in there where we identified support. The problem with a channel or a cycle where there is only a single point of support or maybe a single point of resistance is that it can act as a pivot. And so what that means is you might have multiple price points that are identifying resistance, as in this case, but the actual slope of that channel could change as additional price points develop because we only have one area of support that's being identified. So this channel can slightly increase more to the upside or slightly decrease to the downside. I think at this point it is more likely that it could slightly increase to the upside, meaning that resistance could push a little bit higher. Eventually, we will confirm this level of resistance or whatever the appropriate level of resistance is. And we will confirm that when we see a series of price bars, daily price bars that are moving away from this declining resistance. When we see a series of price bars moving away from this declining level of resistance, then that will act as a validation of that resistance. We may need to modify this channel more. If NDX continues to move higher, that doesn't necessarily make this channel invalid. It just means that the exact precise placement of the channel may need to be tweaked a bit. So why do you go through that work and effort if it's subject to change and subject to each trader's interpretation? The reason I will go through that is because, hang on one second. The reason I will go through that is because it tells me eventually what the range of movement could potentially be. And I like to know what my parameters are. When I am looking at a potential trade on Able Trend, which we were looking at this morning, a trade to the upside, frankly, I want to know whether or not I'm trading closer to a long-term resistance or a long-term support. Again, it doesn't mean I won't take that trade. I saw clearly today on my bar charts that we're trading right at a declining line of resistance, which means that there is less likelihood of a significant move higher than there is a declining cycle to form. I emphasize less likelihood. I don't mean it won't happen. I don't mean to say that a move higher will not happen. I'm just saying that when you're trading in a pattern where historically, for whatever period of time you're evaluating, this has been a line of resistance, then things are either going to turn there or at least perhaps start to stall there. And so this morning when I was looking at Able Trend, and I decided to take a long position buying to open a call on NDX, there was a factor in the back of my mind that said, all right, I'm going to buy this call, and we are trading at 46.25, but I know that we're also trading at or near a strong line of resistance. So I'm a little suspect about the trade. But at the time that I took that trade, both the 3-9-minute Able Trend charts and the 5-15 Able Trend charts were double stacked to the upside, and it was a sweet spot trade. So I'm not bashful or shy about taking the trade, even though my bar charts are telling me a story that says we could be hitting a point of exhaustion of this rising cycle. However, what it did influence me to do is to take a trade that was out of the money, to choose a strike that was out of the money. In my case, I bought to open the 46.75 call, and I bought to open that strike because if, in fact, after I opened that trade, the index started to move lower instead, which it did, then I can very easily convert that long call into a credit spread. And that credit spread would benefit from a movement to the downside. And all of that is exactly what I ended up doing on that trade. So I was willing to day trade this call, this long 46.75 call, but I did not have an opportunity to close it out and take a reasonable profit. And when I saw the price starting to break down on Able Trend, and I saw sell signals coming on the 3.9 and the 5.15 on Able Trend, I went ahead and covered it. And what I hold now is a call credit spread that is a 46.70, 46.75. So my risk strike is 50 points out of the money. It's a good trade. Even if I had just opened it as a credit spread, it's a good trade. So that was the thought process I went through, and that's the thought process you guys should go through when you are looking at a new trade. Don't let a different chart view, in my case, my bar chart, dissuade you from taking a good signal on the Able Trend charts. It doesn't mean that there will be enough follow through for you to be able to close out if you're day trading, or to lock in a profit if you're legging into a spread. But the structure of the trade and the placement of the strikes allowed me to very easily manage that trade without any significant ongoing management. And all of those factors are things to take into account based on your view of the chart. So let's take a look at a 10-day, 10-minute. And what I want to show you here is on the 10-day, 10-minute where we moved right up to that line of resistance twice today. once at 11:20 this morning where we hit a high of 46.27, and then once at 11:50 this morning where we hit a high of 46.27. So this one was just 40 points below, or 40 cents below the second one. But both of those were price points where we hit that high and then we came off of it. We moved up, we hit that high again and moved off of it. As of right now, today's high is 46.27.57, 46.27.57. And as of right now, that price point is acting as our natural level of resistance, and it is validating on an intraday basis that declining line of resistance. And all of that, folks, takes just a few moments to evaluate, a few moments of your trading day to do a little bit of due diligence and look at your charts. But all of that is giving me more and more data about which direction we could potentially move. So the last thing I will do here is, once we see a validation of a natural level of resistance, is I will come off of that high of that natural level of resistance and connect to the next high, and then see if there's a natural connection to a natural level of support. And in this case, although this may change very quickly, the slope of this may change depending on where the next price points print, or the width, the distance between support and resistance may change. But as of right now, that is the declining pattern we're in. We have two price points that are defining our lows, with one of them being a natural level of support. We have a natural level of resistance here that is now confirmed after our high of the day, and all of that is developing a pattern that moves, that's showing a potential move to the downside. Now, that's not inconsistent with the Able Trend charts, because we started to see sell signals printing, started to see red bars printing on the Able Trend 3.9 and the 5.15. And I wouldn't be surprised, but I'm not predicting this, I wouldn't be surprised to see NDX trade down to a low of 46.12, somewhere around in that range. The exact number, if we move right down to it, would be around 46.12.30. And that would be support of this declining cycle. So what we know for sure is that the indexes are going to cycle up and they're going to cycle down. And even when we are in a rising trend, this is a rising channel, we have down cycles and we have up cycles within that trend. All of those cycles are opportunities for us to take positions and take profits. But the reality is, sometimes the movements are so shallow, so small, as they have been today on NDX, that it's difficult to take a profit. And some of that difficulty will depend on the type of strategy that you are using in order to take those profits. I entered that trade. Let's see, we're continuing to move lower here. I entered that trade earlier on the call with the intention of day trading and taking a quick profit of maybe $1.50 just on one contract. So it wasn't going to be a significant profit, but we just didn't get enough movement to the upside. So the signal was good. The signal was actually valid. There just wasn't enough movement for me to be able to harvest a profit from that trade. So I'll be tracking this now, and it's easy now to see when we break below this declining support, or when we head higher and maybe break above this declining resistance. But I now have that in thought and understand where we're trading. Could we trade all the way back down to support of the rising trending pattern? Absolutely. If we happen to stay inside this very narrow range, which I'm going to tell you on NDX would be extremely unusual. This is only a 10-point range on an index that likes to trade in an average range of about 45 points. But if we traded and continue to trade in this very, very narrow range, we could move all the way back down to support of this rising pattern. And technically, we would still be in a rising pattern, but that price level would be around 45.76. So 45.76. I don't know what's going to happen to the index. I'm just trying to let it tell me what it wants to do. I know that we have this long-term channel, which is identified in red, which we've validated intraday today. Within that long-term channel, I have a rising channel, which is capturing the majority of this 14-day movement higher that we've seen them been trading in. And we are currently trading in a very short-term intraday narrow cycle of about 10 points. So that's NDX, folks. Let me just pop the studies on here real quick. We talked last week about the declining Twin Peaks pattern. So you've got momentum is declining, you've got price is rising. The difference between those two, with a declining trend line on momentum and a rising trend line on price, is the divergence that is created, where price will eventually, in almost all cases, snap back lower, because you can't continue to have rising price with declining momentum. You can for a period of time, but the longer momentum declines, the closer it gets to the zero line, the number of times that you have peaks where short bursts of rising momentum followed by short bursts of declining momentum, and as each of those peaks becomes smaller and smaller, overall you have a declining momentum. And we're on a 30-day, 30-minute chart here. You can see that the current 30-minute bar has now just formed declining momentum. So yet there's another peak coming off of the high back in July 11th to where we're trading right now. You can see very clearly that there is a declining level of momentum. If I look at that on a 60-day, 60-minute chart, we still have pretty significant declining momentum. The current 60-minute bar is showing some strength and momentum, but relative to where we've been in the past 2 to 3 weeks, you can see it's pretty shallow. It's very, very narrow. I wouldn't be surprised to see the next bar or the bar after that be a red bar in terms of momentum. And then we get to the daily chart, and you can see that we still have rising momentum, although today's green bar is reasonably flat to yesterday, but it has been still rising momentum. And we're waiting, basically, if we are trading strictly off of a bar chart, which we don't actually take our trades off the bar chart, we take them off the Able Trend charts. But if we were waiting for a signal to queue up on the bar chart, we'd be waiting for 1 to 3 red bars to appear on the AO, on the daily chart. When you take a step back on the daily chart, you can also see that there's another pattern that exists here that all sits inside of our declining red channel. This pattern is a cycle. It's a longer term cycle. It's really been in place since about late March, and you can see the down cycle within that pattern, the up cycle, the down cycle, and we're currently in an up cycle, and we may be reaching a point of exhaustion, still yet to be proven. Won't really, in my mind, be validated until we break below the lowest level of support of this rising pattern, which would be coming off of the 627 support, and that price level would be somewhere around 45.38. So not quite 100 points below where we're currently trading, but if we broke below that, then to me that would be the validation that in fact we are shifting gears and shifting into a declining cycle in the macro view. In the macro view, a declining cycle could potentially take us down to the 4,200 level. It just kind of depends on where we might hit that level of support, if in fact we do. So we've got some support that would occur before 4,200, which would be 200-day moving average, 10-day moving average, and the 2 standard deviation Bollinger Bands. But that's too far out for us to predict what may in fact take place. We're just going to have to wait for the market to tell us. What it has told me as of today, and this is my summary on NDX, what it's told me as of right now, today, is we've confirmed and validated that line of resistance. We formed a natural level of resistance as of right now, and we'll just wait and see whether or not there's follow through on that decline. Let's take a quick look at SPX. SPX is similar on a daily view in that on Thursday of last week, we hit a high of 2168.98. On Friday, the high was 2169. So we had a high that was slightly higher than the previous day's high. On Friday, we also had a bearish divergent bar coming off of that level of resistance. So the important part is not really which of Thursday or Friday had the highest high. It's that they both had highs that were reasonably similar. I mean, within a point of each other, basically. Well, not even. 2168.98 round up to 2169, and 2169.05 round down to 2169. So for all practical purposes, they were almost identical. And what's interesting is they collapsed this rising momentum right there at that line of resistance. If you back up, and I'm going to have to back up to a 2-year view to show this. If you back up to a 2-year view, you can see that there was a line of resistance that we first identified back here in May of last year. There was another resistance level here, another resistance level here in July. They weren't right at that line of resistance, but you can see that they're consistent in terms of reaching up to within that line of resistance and then stalling out and tumbling lower. And we really haven't been trading at that line of resistance since back in July. So a year ago. And now we're there again. And we're trading at that line of resistance, and we confirmed and validated it Thursday, Friday, and again today, because today we've not broken above the high of either Thursday or Friday, with our high being 2167.87 today. So let's look at the 10-day, 10-minute, and you can see where we came up, validated that resistance, came down, moved up, validated again, moved down, moved up, validated it again. But we're in pretty much a sideways pattern right now, a very, very tight range on SPX. It's hard to make money in these tight ranges unless you're trading a purely non-directional strategy like an iron condor or like a market tamer. It's hard to make money, but patience will win the game. And if you don't feel that your active trading in a live trading room requires that you actively be placing trades all the time, then patience will win the game, and you should be okay once the market starts to heat up again. Let's take a look at the 10-minute. No, I want to look at 30-minute. I'll look at 30-day, 30-minute on our AO. Well, that's a very clear declining Twin Peaks pattern. You can see we're pressing right down close to the zero line. We've got the last two 30-minute bars are weakening momentum. All of this in a pattern of continually weaker and weaker momentum. The 60-minute is showing the same thing, although we're waiting for the next red bar to appear on the 60-minute. And then the daily is still showing increasing momentum, but with the intraday weakening, with us stalling out, at least as of right now, near the upper Bollinger Band, as well as the almost perfectly sideways line of resistance, I wouldn't be surprised if in the next couple of days we start seeing weak momentum on the daily chart. And we'll have to wait and see whether or not that occurs. One last thing that I do look for is, are there oops patterns that need to be satisfied? SPX 2156.44. Yeah, there's an oops pattern that would take us back down to 2156.44 to satisfy. There is an oops pattern that needs to be satisfied at 2036.09. So those two oops patterns are likely going to be filled at some point, satisfied, meaning that the price of SPX will trade back down to those price levels, and it won't really be a surprise. I mean, we're coming off of a line of resistance. We see weakening momentum intraday against rising price, and the oops patterns are there to be satisfied, and we know through experience that 93% of the time, an oops will be satisfied by the index. So let's jump here quickly over to RUT, because on my Able Trend chart, I'm actually seeing a buy signal flashing on the 3-9 minute on Able Trend. So the 1 year daily view of RUT, very similar to the other indexes. We've got two prior areas of resistance. These are natural levels of resistance. I don't call them resistance, folks, because I drew a line across there. I call them resistance because without any lines on the chart, I saw that the price moved up to this high and then moved away. That makes that a natural level of resistance. The market defined it as a level of resistance. I saw the price move up here and move away. That high there in that tent, that V shape, is a natural level of resistance, again, because the market defined it. So once the market has defined more than one natural level of resistance, I'm going to put a line across those and project out to the future and say, now I can treat that as a line of resistance, and I can measure what the price activity looks like as we come close to that, or perhaps touch that prior defined level of resistance. I also need a corresponding support. So when we moved lower, there was one support point, one strong support point. Again, this could act as a pivot, shifting the angle of the channel, but it hasn't done that yet. This support point occurred on February 11th of this year. And I know it's a natural level of support defined by the market because all the price activity before it were higher lows, and all the price activity after it were higher lows. Now, if it had come back down and formed a second level of support, that would have been ideal, because having two tops and two bottoms, you've got a very solid channel. Didn't do that, but instead we got into a strongly rising channel within a channel. And you can see that there are multiple cycles within this channel. More importantly, what happened is the last 5 days, 5 trading days, so it would be today, which is Monday, Friday, Thursday, Wednesday, Tuesday. Starting last Tuesday, we appear to have stalled out at this previously defined level of resistance. We stalled out at that level. And all of the highs have been in line with, in sync with that level of resistance. The highest high in those 5 days, I believe, is 1211.77. Yes. So all of the highs in the last 4 days have been lower highs than they were last Tuesday. And last Tuesday was a Bollinger Band snap pattern, which tells us that there's a high likelihood of a reversal in price. Sometimes the reversal in price doesn't mean an immediate or abrupt drop in price, or like we saw here when we had a Bollinger Band snap, there was an almost immediate rise in price. Sometimes it just means we're just going to stall and take a pause here. So the Bollinger Band snap combined with the sideways level of resistance told me that we might be stalling. The subsequent 4 days is giving me some additional confirmation that perhaps RUT is stalling at that price level. Let's take a look at the 30-minute, and let's take a look at the 10-minute. And you can see now each of those intraday price points that were coming up to their own natural highs and confirming the market is defining those levels of resistance, but also confirming a level of resistance that I had previously identified connected back to two other longer term levels of resistance. So last thing, let's take a look at the studies and see if this is consistent with NDX and SPX. And you can see on the AO that we have that declining momentum pattern. We did dip below the zero line a little bit. That's an indication of weakness all by itself. But then we cross back above the zero line and are forming a pretty shallow pattern right here of momentum. So not a lot of strength in momentum, and you can just see how flatlined the price has been. 60-day, 60-minute, pretty steep decline in momentum. Now, on SPX and NDX, we still had green bars on 60-day AO. Here we have the last two 60-minute bars are red, indicating possible weakness. And then the daily, let's just look at the 1 year. We still have green bars on the momentum. So intraday, translation is intraday is starting to show weakness. The daily is not showing that yet in terms of momentum, but you can see very clearly that the market has defined a level of resistance for us here, and that level of resistance is consistent with where the market previously defined resistance, which I always find fascinating. You know, I'm not defining this level of resistance on any of the three indexes. The market defined it for me. And what I find fascinating as a chart technical analyst is it almost always ties back to some previously defined level of resistance, or in the case of support, the same thing. So where could RUT head after this? Let's just get rid of the studies, make it very clean. Well, we have a rising level of support. It depends on where we would hit that, but let's just go out a couple weeks. And could we find ourselves trading back down around the 1125 level? Not at all out of the question. That would be consistent with this rising level of support. Could we find ourselves trading back down around the 950 level? The 950 level? That's 250 points below where we're currently trading. That's not out of the question at all, because that's where we have a parallel line of support to our solidly defined resistance. Could we continue to move higher? Absolutely. The Bollinger Bands are flaring a bit. Could this just be a stall, a pause, taking a breather? Yes, we could continue to move higher. If we did, the good news is we have a level of resistance that we know has already been defined based on this rising pattern here, and that could take us back up to the, let's just say the 1240 level. So I don't know where it's going to head, folks, but this is the data that I keep in mind when I'm looking at my trade signals on my 3-9 and 515 able trend charts, and they influence the type of strategy that I'm going to employ. If I felt there was an extremely strong bias to the upside based on both bar charts and able trend, I'd be buying an in the money call, and I'd be looking for an opportunity to either day trade that or lock it in as a long call vertical spread. But because I see this pattern right here, when able trend alerts to me a buy signal and I want to take advantage of that, I'm going to go out of the money instead of in the money, because if this stalls out or it doesn't give me enough profit to close it out as a day trade, then I can easily convert it into a call credit spread, which would be a declining bias position, declining bias strategy. And those of you in the live trading room saw me do exactly that earlier today. So I hope that's helpful to you. I'm going to flip back to NDX. Hope that's helpful to you. I'm going to just quickly conclude this by jumping back to our able trend charts and see what has occurred in the last few minutes. All right, so what has occurred now that we've gone through that? Well, NDX looks like it might be moving to the upside, but look at how tight support and resistance got in here. It's all just intertwined in here. It looks like we're trying to break out a little bit, but the 515 now has started forming 5-minute resistance, but still showing 15-minute support. So not a trade I would want to take to the upside because the 515 is showing 5-minute resistance. I don't like how inconsistent those patterns are. If I was a more aggressive trader today, which today I am not, I might actually go short here because of the big picture, the macro view that I see on my bar charts. But I'm not going to do that right now. I'd really like some consistency. SPX looks like we're breaking out above. Again, support and resistance are all kind of neck and neck there, but we got a buy signal, and yet I need to see whether or not we print 9-minute resistance again. Look at that, we're getting a 5-minute buy signal, 5-minute buy signal in SPX right here. So 5-minute buy signal just came on. I don't want to buy that. We're just breaking above resistance. Looks like we might be starting to print support again. This is just such a iffy pattern. It's a choppy pattern. Michael refers to it frequently as a chip chop pattern. We're just not going to take that trade. I'm not going to take that trade. Don't let me stop you if you want to take a trade in either direction. We're never telling you what to trade. We're only sharing with you what we are trading, and it's up to you to decide what you really want to do. RUT, very similar. We're now started printing 3-minute support again. It was right below 9-minute resistance, and we're breaking out above that. I'm not sure what to make of the 5-minute, 15-minute chart. We've got a level of support, 15-minute support, but resistance is below that. So anyway, I'm sitting on the sidelines right now. I'm studying my chart, and there's an NDX 5-minute buy signal. I'm just evaluating my charts. Today may be a day that we end up producing no profits. That's okay. There are going to be days like that. There are other days where you're going to have a loss here or there. They don't happen very often, but they do happen. And then there are other days which are very, very strong, unusually strong. And if you take all of that and you blend it in with kind of your average day, you should be able to generate for yourself a pretty consistent average daily profit from your account. Be wise about your capital. Start small. My opinion is start with one contract trades, gives you lots of capacity to increase the number of contracts, cost averaging the position, manage it in different ways, and be patient. Don't try to make all of your desired goal in the next week or 30 days. Be consistent, recycle your capital, look for opportunities to get in, get out, do base hits, take a lot of small profits, and in the long run, you're going to be very happy, I think, with what you do. So thanks for being here. Thanks for being part of our live trading room. If you're brand new to the live trading room, thanks for joining us. I hope this was helpful to you. I know it's always helpful to me to do a complete analysis of my charts, both the bar charts for a macro view as well as the short-term able trend charts.